We're going to go over the British pound US dollar currency cross today and see where it's ended up so far with today's trading and where it is at this point during the week. We are coming to the closure of a week. We've had lots of news that's come out with the Brexit shakeup since Theresa May has resigned. And now we have Boris to look forward to see what kind of magic he can wield for the British pound US dollar. So with before we move on to our analysis, we just wanted to show our Forex Trading Unlocked Incorporated disclaimer, which just lets you know that this video is for illustrative purposes only. Okay, so now you can see the chart here. We have a daily British pound US dollar chart, and we have three horizontal yellow lines. These are our key pivots. As you can see right now, we are hovering just above the one pivot. Right now, the market is trading right around $1.2609, and it's hovering above the key pivot at 125.86. Right now, that looks to probably be some good support for the day. Tomorrow, we'll see what happens. It's Friday, end of the week. Might have some profit taking, which would then probably be some fresh buying that will come in and keep the British pound US dollar from falling apart again for tomorrow's trade. However, anything can happen. $1.2530, which is the lower pivot, probably is the extreme for any slide coming into tomorrow, if it was to come into another breaking day. But tomorrow is probably not going to happen. It's most likely going to be a little bit of relief going into the weekend, and then Monday, Sunday through Tuesday, maybe get another sell-off that'll bring the market back down to $1.2530 area, especially if Boris, the new leader of the pack for the British pound US dollar, doesn't have anything good to say or anything good to bring to the table for moving forward for at least the short-term future. We know the G20 meeting is coming up soon. So right now you can see that there is that lower blue line also. That is a major monthly support line, and up in the upper right-hand corner is a tiny blue line that's sloping downwards. Those are both monthly lines, so we are wedging. Of course, it's a very wide wedge from $1.34 down to $1.25 on the monthly basis. So if this is going to have any type of good news coming into the pound dollar trade after what happens over the next couple weeks leading into the G20 meeting, it's very possible that you're going to see the pound dollar probably set into a range trade between these lower and upper yellow horizontal line key pivot points. If the market gets above $1.27, it's probably just going to be a grind higher back up to that $1.29, $1.30, which would be the lower end of the range that has basically been trading in for a good 5 months. So right now is the market just testing the lower extremes because we have a turnover of leadership. Very may well be. Right now, the market definitely is obviously in a bear market on both the daily, the weekly, and the monthly. So looking for buying opportunities is probably going to be a little bit rough for a long-term trade. You can focus this, like this one here, as an intraday. I would say definitely look for more reasons to sell this market than to buy this market, at least in the short run, until we have some new clear transparency as far as to if the new leadership role is going to change any of the dynamics of the whole Brexit discussion that's going on, not just in the UK, but also between the UK and also the EU. So the dollar strength also doesn't help things right now because that also is hitting the pound as well as the euro and other the major currency crosses. So the pound under pressure from the dollar alone is definitely one of the major driving forces. But right now it seems like, especially as we head into summer with a lot of the markets right now kind of on extremes, as well as we're coming into rollover for the futures contracts, for the June contracts, it's very likely that we're going to start to see some skittish moves over the next 2 weeks, probably at the most 3 weeks, I would say, probably a week before the July 4th holiday or 2 weeks before that is when things will most likely settle down into a lull. We have the Europeans that are on holidays, throughout the summer. The U.S. holiday season is just beginning. So, and the trade talks that are going to be resumed somehow, some way, hopefully at the G20 meeting with any luck, some good news to bring the markets back into a little bit more of a happy mode. So right now things are a little bit uncertain, as everyone knows from the news. It's like they go one way saying one day that everything's moving towards each other on both sides, and then the next thing you know is they're either the U.S. or China is coming out with some sort of backlash that definitely doesn't go with the tone that was set from the prior days before. So we know it's pretty much a never-ending soap opera right now, and that definitely is impacting the British pound, U.S. dollar also, as well as the world economies are right now. I wouldn't say necessarily slowing; they're coming off of running on red lines. So I wouldn't say that we're, right now everyone's screaming recession. There's a yield curve inversion. Well, the yield curve inversion not necessarily predicates a recession always, and right now it's also a short-term influence. So let's see if it really holds, and if these things really are starting to be variables that will actually impact the pound and the U.S. dollar, let alone the pound-dollar cross. So right now, what to look forward into the rest of the evening's trade, most likely the way it's looking is that the market hit on this medium pivot at 125.86, and right now it seems to be holding pretty firm for the day. So I would say as we're heading into the weekend, we'll see what happens with tomorrow's trade over in Europe. There's nothing that seems it's going to really shake up the markets at all, really too much. So the low of today may be for the next day or so a short-term bottom for any short-term longs that want to try and maybe get a little rebound on possibly a profit-taking rally that could unfold tomorrow. So we'll see. We're heading into the daily close over the next hour and a half in the currencies, and as the U.S. markets close, we'll see what happens as we move into. You got to remember, it's month end also, so there's a very good chance that you're going to have a lot of profit taking going on tomorrow. Tomorrow is Friday; it's the end of the month, and we're also heading into summer, so we might have a lot of rebalancing going on as far as with the banks and a bunch of funds and what have you. So it's not that we couldn't have a big sell-off, but it's probably more likely that since we hit nice support today off this pivot, that we're going to have a profit-taking rally that will keep the market afloat and bring the bulls back into focus for at least a day or so. But like I said, if we do get a rally, it's most likely a profit-taking rally. It's not a bullish move. It's not by any means a buy signal. I would say, if anything, it's probably going to be setting traders up for another chance to sell this market down. So we'll see as we what the kind of news we have coming out this weekend as far as moving forward towards the G20, and we'll see how the new leadership in the UK also is starting to unfold. So with that, we would like to just say thank you very much for your time. And we hope that you like this little snippet of analysis about the British pound, US dollar. And we will definitely be coming up with some more. And if you liked it, you can check out one of the books that I've written. It's available on Amazon, on Kindle, and paperback. And the name of the book is High Probable Japanese Candlestick Patterns. We're actually going to start coming out with some videos that are going to highlight some of these patterns for both buying and selling. And their patterns have been used for over 400 years. They're giving traders an edge to help them navigate the different markets, whether it be financial markets, grain markets, all of the different agricultural markets. So they are at this whole type of analysis applicable to all types of derivatives, all types of stock markets, options trading. It's just a matter of figuring out what kind of directional trader you are, a non-directional trader you are, and then how to use these patterns and integrate them into your trading, and especially when you're trying to minimize and mitigate your risk. So with that, we would like to say thank you very much for your time and good luck with your trading. Take care.